Hello guys and welcome again. Good. This is Stf trading floor. And there's something, and before you take our signals, I found that there are some guys who are actually that are not be able to understand on how you go about our signals. And the main key thing, number one, should be, we said number one, you should be patient with your trade. Number two, you should have good at risk, and number three, good trade management. So those are the key things I need to pick on that. But the key thing is on how we place our TP and our stop losses, because you need to know our risk levels and our target levels. And I was able to explain based on the ATL value, because I think that is the one that we're having problems with. So the key thing is you should be able to know how do we take our signals. And the key thing that I did explain, number one, is that like on a Friday, we had a free trade, which was on gold. So I told you, number one is that you should come here to trend, come to oscillators and pick this indicator we call the average true range. And you change this to 200, the period, because this one we said that it takes the number. When I'm talking about numbers, I mean that it takes the number of days that you need to average, picking the highs and the low of a candle each and every day and getting the difference. How many points or how many pips the each and every candlestick take? Like on gold, you can check we are taking 23 points, 23-point levels. So that means each and every day I'm expecting gold to take 23-point levels. That one being said, that means that every time I'm placing a trade on gold, I'm expecting gold to move 23 points. Okay, but that does mean this means on 200-day candlestick, that means it takes the big ones like this one that did move over 60 points on Friday. This one was a bit crazy, but I've explained that 62. Others can be quite very small, like this one that takes almost less than 10. You can check on this candlestick here. This one takes only 8 points, but there are others on average, all of them. Taking the difference on the last 200 candlesticks and dividing by 200, you get one number. That tells you, it will give you a clear number on what should be your target on each and every day. That means almost 80 or 90% of the days. And that's why we are taking as many candlesticks as possible, because like if we take that the last 14 days, this one will give us long calculations because of this. So we wanted to be swallowed in around here. Remember, the higher the sample, the better. And this one, you only take it on daily charts alone. So that means that if I pick a trade on H4 chart, like on Friday, our trade we had picked at this point here. This we had picked our trade at an average of 1879, 1875. So that means your target number one should be half the ATR. That should be your stop loss. On the daily chart, since it is 23, that means you could have taken your trade at point minus. Now, let's say an average of 14 points. So you are supposed to come all the way to 14 points. You are coming to 1861. That is where our stop loss was supposed to be. So if this trade drops all the way to 1861, you should be exiting that trade. And that's how I place my stop loss, because I'm picking the trade on lower time frames. But based on the conferences of the daily and H4 chart, this one is only to minimize the risk. It is not meant, that minutes time frame is not meant for any trading purposes. It is only for triggering the entries. So targets, you can check like this one. I'm taking it from the daily chart. And from there, then for the TP, you take 23 points. If you come here to the daily chart, you can check these are 23 points. So from 1875, you calculate 23 points, which comes to an average 23 points. Such a point. That means 1899. That means it's at around 1890. That could have been our target, 1890, sorry. Yeah, that could have been your TP. So that means on such a trade, if I go back to the that minutes time from, that means the risk reward ratio, the risk or reward ratio should be, let's calculate and see whether this one they are 23 points and the stop loss is at an average 14. This is 15, it is not 23. So 23 is at price 1890. So it should be at an average, it should be at an average of 1898, sorry. 1898, sorry. That one I found it, we had a problem there. Yeah, 1898. Let's just remove this one and put it to 1898. Yeah, this should have been our target. So by look of that, you can see the risk to reward ratio is 1:2. And that's how I do with all my currencies. So let's go to USD CHF. We heard that we also had that sell on Friday, and it dropped quite well. You can check. I remember very well my entry was on this candlestick here at this price of 0.9065. So what do? I'll go to the daily chart and check what is the ATL value. Now becomes, it is 72. That means for the last 200 candlesticks, they are moving from its highest to the lowest is 72 pips or 72 points. That means I go to the 4-hour time frame. If I'm picking half of that 72, I'm picking 34. I'm picking 34 points. So I'll come all the way to 90.98. That is the price. That should be my stop loss. 90.98. Do you see this? Check this one very carefully. 90.98. There. So if I'm picking my TP at 180 here, that means that then I will calculate 72 points. I'll drop all the way to 70, which is an average of 0.89, 0.8992. 0.8992 is the price. 0.89. That is my target. 89.92 is there. 18.99. So you can check once again. This one should have been your target. You can check once again, 1:2. That's how I priced even this trade on Friday. Then from there comes another issue whereby if maybe a case whereby you're opening, like in my case, I like opening 2 or 3 trades, whereby trade number 1, if I hit have the ATL value, right? You can check this price point here, have the ATL value from this point, whereby over 99% of my trades will hit that. Then what happens? I'll come all the way to that point and I'll close the first trade. Then I'll take this stop loss and come and break even. Break even simply means you are taking your stop loss from the negative side to the positive side. So even if anything happens, I've already have 34 pips on the bag and I've closed here like 5 to 10. Mostly an average of 5 pips here. I've breaked even. So even if this price comes back, I've already bagged something. If we move all the day and I miss by a whisker like this one, just exit that market. It is good for you. If it hits, well and good. If it hits the other TP, go home. Wait for the next trade tomorrow, like what happened with gold. So even when it comes to indices, we will do one and the same thing. There's no difference that there's no difference between and the problem, especially with these indices, is that they can be quite tricky if you're not keen enough. That means you need to check the ATL value once again. You can check it is under 200. So it is something like a step index, which we had given again on Friday. We had a free signal here. Let me demonstrate with this one. Yeah, this is the trade that we had given. So let me check the exact entry where you had hit that trade based on my strategy. I think I need to check that. Oh, it's not working with what is happening. So let's go to, I think I need to put it and let's go to this point. Let's check as it is from this price point here. Yeah, this was a step index. We were there on Friday. So today we on a Monday, Sunday, step index. Yeah, there's sometimes, like an example, if I am to hit a trade like from such a point, let's say this one is not clear because it has so many it has too much noise there at that point. So from this point, what we should be checking, if I hit an entry like from this point here, I should be able to check how many points is it moving. 46. That means the TP number 1 is at 23 points. So I'll come here and move all the way this bus all the way to 23 points. So I'll move up to the 23 points, which is half the ATL value, which is at, let's say, 83.55. 83.55 on average. 83.55. Let's move up. 83.55. So this should be your stop loss, and TP should be 46 points from that point. So you can be able to put 46 points. We are at an average here. We are already at 44. So 82.85. 82.85 on average. 82.85. So this one is the best because nowadays 82.85. An average around this price point. So you can check once again, risk reward ratio is 1:2, but you can check like yesterday this trade, at least it did move 23 points or 23. The 23 points on the daily chart, these ones, that tells you, you can see it moves 23, which is have the 1 ATL value. Then that means you cross and you break even the other one. So everywhere, that's how you should be doing with the market. Then make sure, especially for indices, we have a free PDF on our Telegram channel. Always come here at the Telegram channel. My Telegram channel is here. If you are not on the Telegram, come under files, pick this PDF you find here, Daily VIX Index PDF. This one has all the minimum volumes that you need to check for all the indices. Especially now for currencies, it becomes quite easy because this one, when you're having your account sizes, in my case, like I just divide my currency with the, I'll only check based on the I'll divide my trades based on the one trading lot, or it's called one standard lot size of 1.0, which used to be 10,000 USD. So what I do is that I divide my trading capital or my equity with 10,000. Like an example, if I have something like, let's talk, if I have something like $1,000, I'll divide by 10,000, I'll get 0.1 volume. So there is at no one time I'll ever trade with more than 0.1 volume when I have 1,000 USD. So what I'll do, I'll divide that 0.1 volume by 2. I get 0.05. I get 2 trades. That's what I'll be trading. One, all of them TP at 1 ATL value. When one hits the half mark of ATL value, like when it did it at 1884, I remember very well on Friday, this is where we did hit our first TP, and we did break even, it moved up. Although we didn't calculate the TP they were supposed to be. So even if this price moves all the way in such a crazy move, when you have hit your 1 ATR, just exit the market. And that is it. Do not complicate things when it comes to the market. I think that one is always the best thing you should do with the market. And from StFX Trading Floor, I think I've been able to give you a guide for more one-on-one. We'll be live on TikTok and more discussions on the Telegram. Thank you.